So this video is on the cost of plant assets. First of all, what are plant assets? And a lot of this is written down on the notes, so I'm not going to write it all down again here. Basically, plant assets, we're talking about land, buildings, equipment, and land improvements. Plant assets, you'll find them called different things in different financial statements. They can be called property, plant, and equipment. Operating assets, they can also be referred to as fixed assets. So they have a few basic characteristics, and these are important when you're classifying them. They have to have physical substance to be called property, plant, and equipment. They also have to be used in the operations of the business. This means that if you have land you're using as a parking lot, you can refer to that as land. But if you have land that you've bought, your company has bought for speculation and you're planning to sell it, that's not used in your operations, and that would be classified as an investment of some sort. The same with buildings. If you've got a building that you're using for your operations, you call it a building. If you have an idle building or idle machinery, idle equipment that you're not using, that would have to be classified as other assets. Property, plant, and equipment, when users of financial statements look at it, they're trying to determine, how much are you putting into plant and equipment to generate, whatever you're doing as a business. So operational assets. It also will usually have it'll have a useful life of more than 1 year. In other words, it's something we're not going to use up in the current period. Hopefully you're building a truck, equipment is going to last beyond the current accounting period. Also, these are items that are not for sale, not for resale to our customers. So if you're a corner store and you sell ice cream and popsicles and things, and you've got a freezer chest that you keep them in, that freezer chest is a plant asset. You're selling what's in it. You're not selling that freezer to your customers. So your plant assets are not for resale to customers. So you make the distinction between idle land and idle equipment and things that you're using in your operations. Okay, how do we record the initial cost of a plant asset? So far from AC 101, you've just been given, okay, building, $100,000, truck, $30,000, and it goes on to the books. We get a little bit more detail now. The assets are going to be brought on the books at what they initially cost us, but then plus whatever it takes, whatever expenditures it takes to get them ready for their intended use. So if you think of something like land, you have the exchange price paid, and that is going to include the cost of the land, but also the title search, any closing costs, broker's fees, commissions, all of that, legal fees, and back taxes that you might have to pay to buy it, what they would call accrued taxes. A lot of times, if you're buying a parcel of land, the previous owner will have just let the taxes go, and you're not allowed to pass papers until those taxes are paid. So those are, past taxes, accrued taxes on the land. Also liens, if people have put liens on the property. So those would be the exchange price paid. That's all included in that. But then you also have things like getting it ready for its intended use. So if you bought, a parcel of land that, has a hill on it and it's got trees all over it, okay, and you want to put a building right here, well, you've got to do a few things before you can do the building. You have to cut down the trees. That would go into the cost of the land. You may have to get, I can't draw a bulldozer, but you might have to bulldoze all of the land down to get it sort of level so that you can start your building. So basically, the costs of getting land ready for its intended use could include tree removal, grading to prepare the site, water sewer lines that are going to be more or less permanent, And then, oh, you might have had an existing building on the land that you didn't want to keep, okay? So you've got this old building on it, and so you might want to demo that building. So you might demo the building, okay, and so maybe it costs, you know, $5,000 to demo the building, but then you have a nice brick chimney, and you might be able to sell those bricks as salvage. So you'd say, you know, less any salvage costs, any salvage value that you got out of it. So say you got salvage value on the bricks of $1,000. Whoops, you would add to the cost, you know, your $4,000. So that's that would be all your costs of land. What would not be included in the cost of land would be any ongoing property taxes, the annual ones that you pay from the time you buy the land forward. Okay, so that's land. Let's talk a little bit about land improvements. This is a different category. You have your land, and land improvements are things like fences, driveways, parking lots, underground sprinkler systems, things that are man-made but are more or less, you know, they will wear out over time, but they're just man-made structural improvements to the land. So streetlights, fencing, major landscaping would be all included as land improvements. What's not land improvements? Just planting some flowers. That's just would be expensed. Routine maintenance, mowing lawns, you know, all of that would simply be expensed. But your man-made structural improvements are classified separately from the land because we're going to depreciate them over time. They will wear out, unlike the land, which we don't depreciate. Okay, buildings. Let's say you buy an existing building. If you buy an existing building, it's going to be all the same exchange price paid costs as for land. In other words, the building itself, title search, any closing costs, legal fees, commissions, back taxes, liens, all of that goes into the exchange price paid for the land, for the building, sorry. Plus the cost to get it ready for its intended use. So maybe you've bought a nice building, okay, and it's got a door, and it's not going to be big enough for you, so if you have to put on an addition, that would go into the initial cost of the land, of the building. Any major repairs, remodeling, say you upgraded the entire electrical system, that would be included in the cost of the building. It's anything to get it ready for its intended use as you're going to use it. If you buy you know, land, or you have land already and you've gotten it all ready for its intended use, and you're constructing your own building, the costs of that building start once you start excavating the foundation. So once you start digging the hole for the basement of that building, that's where your physical costs of the building start. It's when you start doing that. And then it would be all the, you know, the materials, the labor, all of your construction costs that go into building that new building that you want. Also would be architect's fees. There's building permits that have to be gotten. All of those would go into the cost of your building, along with some overhead and interest, but we don't really get into that too much at this point. Okay, a truck. If you're buying a truck, you have the exchange price paid, and that would include the sales tax, because that's part of buying the truck. So you've got your truck that you've bought, and so it's going to be the, you know, the initial cost, but it's going to be sales tax, because you can't avoid that. And then the cost to get it ready for its intended use. So maybe you need to put some kind of a trailer hitch on it, and required is lettering of you know, the company name has to be on the side of the truck. And so the cost of lettering and it, getting it ready. If you bought a truck that had a bed, maybe you need your toolboxes, you know, another wheel. You know, so anyway, you have all of those costs to get the truck ready for its intended use would go into the initial cost of the truck, that it's brought on the books as an asset. Okay, machinery, exchange price paid, plus the cost to get it ready for its intended use. With machinery, that would probably get shipped to you, so that would include costs like shipping costs to get it to you. Also insurance while it's in transit in case the truck tips over on the way. Then with a machine you have assembly and installation, and then you have testing, and that can run up considerable costs. All of that cost to get it ready for its intended use is capitalized as the asset machine. Once you get it up and running, then the costs are expensed. Things like oil changes, routine maintenance, and annual excise taxes, that goes with the truck as well, are always expensed, so as opposed to the initial cost of the machine. So that's the initial costing of our plant assets. The next thing we have to learn to do is to depreciate them.